Welcome, ladies and gentlemen, to our 6-minute video series where 6 minutes can save you hundreds of thousands of dollars in capital gains taxes and earn hundreds of thousands in extra income. My name is Joe Metz, and we believe that we have the perfect retirement solution for landlords and the best way to avoid the capital gains tax on your personal residence and your rentals. This is episode 32 in the series, picking the best DSTs and REITs. So what is the best source of DSTs and REITs and how to pick the best ones? So before we get into that, I want to tell you a little bit about who I am, what we do, and what's in it for you. Again, my name is Joe Metz. I've got over 40 years of real estate experience. I'm a licensed real estate broker, real estate consultant to senior homeowners and landlords, helping them avoid the capital gains tax while boosting their income. We offer services way above and beyond those typically provided by regular listing agents at no extra cost to you. Standard legal disclaimer, folks, I'm not a CPA, I'm not an attorney. Please consult your own professionals. So, what is a DST? Well, a DST is a Delaware Statutory Trust, getting very much more popular these days. They're an entity that own investment grade real estate. Think like large apartment complexes, shopping centers, etc. And when you exchange your rental property for a DST, you actually acquire partnership shares of these properties. So DSTs are a very common vehicle for owning management-free real estate, and they provide another opportunity for avoiding the capital gains tax. What's a REIT and why buy them? Well, a real estate investment trust is a company that owns and operates income-producing real estate, usually, again, an investment-grade real estate. They provide an investment opportunity like a mutual fund, makes it possible for everyday Americans to benefit from the ownership of valuable real estate. REITs allow anyone to invest in portfolios of real estate assets the same way they invest in other companies through the purchase of individual company stock or through a mutual fund or an exchange-traded fund. Approximately 170 million Americans live in households invested in REITs through their 401k, IRAs, pension plans, and other investment funds. And after an initial incubation period, they can be liquidated once a quarter, while the DSTs have a longer hold period. So, properties typically owned by DSTs and REITs. Multifamily is a big sector. Here's another multifamily example. Amazon warehouses, very popular these days for investment purposes as well. So, I'm sure there's so many people out there today pushing these DSTs. How do I find a good one? Well, I would say that most companies selling these products are probably going to steer you straight, but there are some thoughts. One, how long have they been in the DST business? Two, use a DST advisor, a broker, basically, not the DST owner themselves. And ask your advisor what kind of due diligence they do. Do they do all three levels, like as a sponsor level, location level, property level? This is a sheet, folks, that might give you a little idea of a comparison of what you can get in cash flow, which in this case is 57.6 a year from your rental in Palo Alto, let's say. You're renting it out for $6,000 a month. After taxes, insurance, you're getting $4,800 net, $57,000 a year. If you go into a DST, they return about 5%. So your income would more than double by going to $12,500. And if you bought a REIT, then your income would go to $15,000 a month or $180,000 a year at a 6% return. Whether you buy a DST or a REIT, you're going to retire from active property management. That means you're going to get rid of the three T's, the tenants, the toilets, and the turnovers. As we get older, dealing with a vacant house or a vacant property ready to rent and finding a new tenant can be a royal pain. You don't need this anymore. You can avoid the capital gains tax of hundreds of thousands of dollars, sometimes over $1 million, and double your rental income in the process in most cases. I have this device that you might want to take a look at here. We call it our capital gains tax and income estimator. You plug in six or seven numbers here in the green cells, and then everything down here will show you the result. For example, in this one, you're avoiding a $917,000 capital gains tax, and you're boosting your income from $4,500 to $11,750. So just call that number or reply to this email, and we'll be happy to send you one. So, sounds interesting, right? How can you learn more about picking the best DSTs and REITs? I want you to join us on July the 15th at 5 o'clock, where you can learn more about all of these options for you. And to register, just call that number or go to conquercgtax.com. If instead you need help right away, call us at that number there, 650-758-0319, or email us at that email address. Remember, we are your one-stop shop when it comes to retiring from your real estate rentals and putting all these pieces and experts in place so that you can earn extra income. Make sure that you have an ironclad plan for avoiding the capital gains tax that will not be challenged by the IRS. We are your one-stop shop. We do it all for you. You pay us nothing extra. Our fees are paid by the top realtors that we work with on a shared basis. Thank you for your time today. Any questions, call us at that number there or email us there, and see you next time. Thank you.